Hi there, this is Manidibak from Momentum Lab. Today I'm going to bring another topic in the mutual fund space, and this time we're going to pick a very interesting category that almost everyone keeps talking about, which is the small cap mutual funds. So, without any further ado, I'll start talking about small cap funds. So, to begin with, like we did with the large cap funds and the mid cap funds, we will first define what these are, what are their allocations as per SEBI, and then we will start talking about their benchmarks. And of course, we will then list all the mutual funds in the small cap space. How are they doing from different perspectives? But mind you, this is not to recommend you any specific mutual fund, but to educate you and make you aware that these are the funds that we have. How are they performing? How did they do in the last few years, right? And another disclaimer that I wanted to add is that we're looking at the last 10 years of data. So some of the market regimes that we talk about may not be present in the last 10 years. So just keep that in mind. So let's start defining what is small cap in a small cap fund, right? So small cap is essentially if you rank all the companies based on full market capitalization. So everything that is ranked, beyond 251 is considered as small cap, right? So when you say beyond 251, till what number? It can be any number, right? So you can consider, or a mutual fund can consider all the companies that are listed and that are ranked past 251. So as you can understand, with small cap fund, they can actually go into even micro caps and invest in any company that is listed post 251 rank. That essentially means there are roughly 2,600 stocks in NSE. So they can invest in any stock from 251 to 2,600. So you can understand the risk that comes with it, because small caps may not be highly liquid and they might be highly susceptible to business risk, right? So a fund manager needs to do their own due diligence, like the corporate governance. It could be the quality of the stock before they put the money into it. So with that definition, I'll then talk about how is a small cap fund defined. Similar to how mid-cap fund is defined, where at least 65% investment goes into mid-cap stocks. Here, with small-cap fund, at least 65% investment goes into small-cap stocks. With mid-cap fund, the number of stocks that a fund manager can invest in is limited, right? So from 101 to 250th company. So that's roughly about 150 companies. But here, the scope is large. The risk is also quite large. So this is Mutual Funds IEA website. As you can see, here also they mention why you can invest in small cap funds. There's significant growth potential. They could be undervalued assets. There is significant M&A opportunities, right? But having said that, this is only for people who can embrace higher risks and explore long-term financial opportunities, right? So long-term could be years and years and not just months. This is Kotak Mutual Fund in their website, also talking about small cap fund. And as you can see, they mention that the fund comes with greater risk and volatility. So this is only for people who can take that additional risk and has that risk appetite to invest in small cap funds. Lastly, I want to talk about the benchmarks. The small cap fund is benchmarked against Nifty Small Cap 250. Nifty Small Cap 250 is defined slightly differently in the sense that you have only 250 stocks there compared to what a small cap fund can do, right? So keep that definition in mind when we compare the fund with its benchmark. Here, I have plotted all the small cap funds in the risk and reward space. So you have volatility on the x-axis and 3-year rolling return on the y-axis. And we kept talking about it in the last 2 episodes as well. So you can refer to them to understand more about 3-year rolling return and volatility. Though I've eliminated few funds which do not have more than 7 years of data, right? So anything that has less than 7 years of data, you will not find it here. And now you can see Tata Small Cap Fund, Bank of India Small Cap Fund, and Invesco India Small Cap Fund are on the top here, but don't draw any conclusions yet. They seem to be on the top because they have lesser data compared to the other funds that are present here. So I think most of all the three funds here were started in 2018. So they have very close to 7 years of data. So that's why you're seeing them at the top. So I would just drop them from this risk reward space so I can see what are the other funds that are still at the top, right? So Nippon India Small Cap Fund seem to be at the top. So I'll take this as a fund for doing a variety of comparisons in the next part of this video, and also comparing it against the benchmark. And we'll do also compare Nippon India with SBI Small Cap Fund and see how that is doing, because it seems to be at the top, but on the left, right? So very interesting space. Even Access Small Cap Fund seems to be on the left in terms of volatility, but lower 3-year rolling return compared to Nippon India Small Cap Fund. We're seeing the same list of funds that we have seen in the risk reward space on this table. As you can see, we don't have any numbers for 7-year rolling returns for these three funds. And that's exactly the reason we kind of removed them from the risk reward space. So here, this table is sorted by 3-year rolling return. And again, as you can see, Nippon India Small Cap Fund kind of stands out in terms of the returns. But in terms of max drawdown, you see it's nearly 50%. Half of your investment can be wiped off if you are investing in lump sum in a very bad time, right? So a similar drawdowns for other mutual funds as well, except I think Axis Mutual Fund did a pretty good job in terms of max drawdown, and so did in some sense SBI Small Cap Fund as well. Now we'll start looking at how these funds have performed in the last 10 years in a more visual format. As discussed, we'll start with Nippon India Small Cap Fund, which seems to be at the top on the graph, and compare that with two benchmarks. I'll start with Nifty 50 and then compare that with its own benchmark, which is Nifty Small Cap 250. So Nippon India Small Cap Fund, and just type Nifty 50. And when I run the backtest, you'll see that the trajectory is interesting. It's more steeper compared to Nifty 50, but if you see the drawdowns, they are huge. If you look at the blue line, which is the Nippon India Small Cap Fund versus the red line, which is Nifty 50, it's almost always at the bottom compared to Nifty 50, right? Except at this time, I think in 2015, you notice that Nippon India Small Cap Fund did better than Nifty 50 in terms of drawdowns here. Now I'll bring your attention to a few more things. I'll go straight away to the rolling returns. And you can see here that this box plot seems to be extended. It's like stretched compared to the Nifty 50 box plot. And you can see the wide range of returns, right? So someone who's lucky can get up to 56% 3-year return versus a minus 7.1% return as well. Whereas for Nifty 50, it's more concise. When you see the 3-year rolling returns on a timeline, you notice something interesting. You notice that there was a time they actually crisscrossed. You can see Nifty 50 is at one point was doing better than the Nippon India Small Cap Fund. And this is exactly where an investor can think that, okay, I think I should move away from Nippon India Small Cap Fund. So that's exactly the reason someone has to understand their own risk appetite before investing in a small cap fund like this, right? So there could be times when your returns are worse than Nifty 50. And if you cannot tolerate that kind of risk, you should be prudent to consider other funds for such investments. So when you go to 5-year rolling return, you can see that the margin between the blue line and the red line has slightly improved. There was a time it almost coincided, but it was never below the Nifty 50 5-year rolling return. But when you look at 7-year rolling returns, only then you realize that, okay, the gap is clear. The fund is doing pretty well only on a longer term. So that's why you see those citations in Amphi and in mutual funds IEA that you need to stay in these funds for a longer time to reap the benefits out of it. Now let's compare the same fund against a different benchmark, and which is the small cap 250. I selected that and I run the back test. Now here there is a twist to the story. If you can recall, Nifty 50 was always better than a small cap fund in terms of drawdowns. But if you see a Nifty small cap 250, it was always below the small cap fund. So the fund managers did a good job, though they were allowed to invest beyond the 500th stock compared to small cap 250, which is stopped at the 500th stock. They did a good job containing the drawdowns, right? So this is one of the funds that we are talking about. There could be funds which probably did worse than this index. Now let's look at the rolling returns. I'll straight jump into it. Maybe we can quickly look at the drawdowns. As you can see, the drawdowns are better for the small cap fund than the Nifty small cap 250 index. It's about minus 48% versus minus 60%. And even with max drawdown days, this recovered quicker than the small cap 250 fund. And when you look at volatility also, you understand that this fund is less volatile compared to the small cap 250. So now, when you see the 3-year rolling return compared to the index, you don't see that crisscross anymore when you looked at Nifty 50, right? So this fund seems to have consistently beaten the index in that sense. And that's why the magnitude of the difference is medium here. On a 5-year basis, it's large already, and a 7-year basis, obviously, it's even larger, right? Versus Nifty 50, the fund is doing better in terms of returns, but not in terms of volatility and drawdowns. Versus a small cap to 50 index, it is doing well both on returns and risk standpoint. Now let's compare this fund with another fund, right? So here I'll take the next in the category SBI Small Cap Fund and run the backtest and see how these two funds are faring against each other. Now, you see, I think they are very closely aligned when you look at the NAVs. Even the drawdowns, I think Nippon India seems to be at the bottom during this period. Other than that, they are pretty much aligned. Now I'll go quickly to 1-year rolling volatility. Here you can see that the blue line is Nippon Small Cap Fund and the red line here is SBI Small Cap Fund. And you can see Nippon India is always on the top of small cap fund. That means it is highly volatile, right? On a rolling basis, it consistently beaten SBI small cap fund, meaning it is more riskier than SBI small cap fund. So that is something that you need to notice. You can see that here as well in terms of max drawdown. SBI seems to be doing a better job in managing the drawdowns. I also want to quickly show you the Sharpe ratio. While Nippon India seems to be at the top when we just look at the 3-year rolling returns, but when we look at Sharpe ratio, SBI small cap fund stands out compared to Nippon India small cap. And that is also visible in these box plots. The box plot for Nippon small cap seems to be more stretched, right? So it means it's highly volatile compared to the small cap fund from SBI. Now I'll move on to the next fund, I will, for a change, pick one of the underperforming funds and compare that with Nippon India. So I'll compare Nippon India with Aditya Birla Small Cap Fund. And when I run the backtest, you can see that Nippon India seems to be consistently doing better. Even in terms of drawdowns, the Nippon Small Cap Fund has beaten Aditya Birla Small Cap Fund. And when we look at drawdowns, you can see, Aditya Birla had huge drawdowns, minus 57% at one point. Volatility is more or less similar. The drawdown days is even higher for Aditya Birla Fund. And when you look at the box plots, they seem to be stretched similarly, but Nippon India seems to be at the top compared to Aditya Birla Fund. That's visible even more clearly when you see 3-year rolling returns on our timeline. The blue line has consistently beaten the red line. That's why you see that the magnitude of difference is medium. And when you take a 5-year horizon, the magnitude of difference is large, and 7-year, obviously, it's still large, right? So those are the comparisons of different small cap funds. So make sure you're looking at these different parameters, and if possible, even more analysis from your side before you start putting your hard-earned money into these funds. With that, thank you so much. Have a nice day.